noon, and it is a wild market day. And I get excited about doing live streams on days like this because it gives us so much to talk about. Before we do, I want to give a shout out to our friends at FEG Token and smartdefi.com. If you are interested in what DeFi is supposed to look like, then head over to smartdefi.com because they've got it nailed down. And I also want to give a shout out to our friends at BYDFi Exchange. And they've been great partners. Every week they give away training bonuses to people that have signed up with our link, which is available at Blunhouse TA on YouTube. And then, of course, our X link, which I think is at Blunt420. And the code, if you happen to run over there on your own, and you can see this on your screen now, is K5Z4TP, just as you see it there. All right, so let's get to the fun stuff now. And I have a guest today that I want to include in our conversations, Rico Moneybags. Thanks for joining us. It's always great to have you here because you're a true testament to hard work and what, not just with technical analysis, my friend, like you're killing it with XBX Pay too. And that's a shout out to you guys. It's great to see a real DeFi project with real utility in the real world get some traction and do well. So hats off to you. I know you've worked really hard in your whole team, so congrats on that.
Thank you, bro. I appreciate it. I'm here to. I was looking forward to this one. We were due up for another session, especially after today when I woke up and I saw CFX. I said, "Oh yeah, it's time to how's the saying goes? The squeaky wheel gets the oil, and
Yeah.
it it was time to oil the squeaky wheel with all this market volatility." But thank you, bro. I really appreciate it. And without the team that I have and community and actual support from Rocks, he uses the whole like XPX infrastructure to pay for smart DeFi and stuff. That's really gotten us a lot of recognition with other projects and stuff like that. But
Oh, that's cool.
yeah, man, here to do some serious TA with you guys and learn as much as I can with Blunt once
Well,
again. This is one of my favorite parts of the week.
these are great days because, the volatility is shocking enough to engage people in, in conversation and, all those things that you were afraid to talk about before because didn't want to look silly or were afraid to ask. Like, these are the days to do it, right? Because you get to see it in real time as it unfolds. And we talk about in here that the way that I approach analysis when it just comes to simple reading price on a chart is through fibs, Fibonacci's, fractals, multiple time frames, and filters, filtering out the noise. Those are basically the three pillars. Within them, there's other rules that we have. First attempts typically fail. We look for points and flats to indicate changes in direction. Break one level, find the next. And of course, we use the volume profile that you see on the right side of your chart to kind of help guide us into those gaps that can usually have some velocity to them. And in its simplest form, that's what we're doing. It's all about money in, money out, right? The ebb and flow of trading. Nothing's going straight up, nothing's going straight down. And whatever time frame we're looking at, everything being fractal, we will see on another chart on another time frame. And once you've done this for more than 5 minutes, you'll understand what we're talking about. And there's so many things that can surprise us when we're looking at our charts, right? And this is just an hourly chart of Bitcoin that I wanted to bring up. And there seems to be this belief that it can't happen to me, right? It's, whether you're trading or walking down the street, you got this mentality that it can't happen to you because the odds of being wiped out or hit by a car are traditionally pretty slim. However, this is a real good indication that things can happen to us, right? It all starts somewhere, right? We don't wake up in the morning and see a big red candle on the daily chart and go, wow, I guess this all started today. No, it didn't. It started well before today. That's why we talk about fractals so often, right? So that you can look forward and backwards and not get hit by something you didn't see coming. Right? And it's our job to try and give you as many tools as you can use without overwhelming, to try and give you that heads up and understanding that, hey, you know what, I think we're changing direction here because this is happening, and this is happening. And again, it'll become intuitive and instinctive over time. And you'll realize that the chart doesn't lie. There's no praying, there's no hoping. When you see a rollover like that, as you see on your screen, I don't care how religious you are or how many dances you've done, that doesn't matter. Price is going to do what price is going to do. We just don't want to have to see you in a position where you're freaking out like that, thinking that you need to pray. It doesn't matter if you're leveraged or you're not. Price on the chart is price on the chart. You have to manage the leverage, we know that. But when we look at this hourly chart, because if we're using our fractal analysis properly, we're not just looking at this daily chart where we see just one, big green candle, thinking everything is fine. There's nothing to see here. We just don't know what's coming after each and every candle. But something was happening inside this daily candle. If we dial it back, what do we talk about? We talk about looking backwards to try and see things that will tip us off that, hey, maybe we have a little bit of a problem here. Right? This white line is a level that we've used in our previous analysis as a support and resistance level. It's interesting to note where this move took off from, which is also, I think, the lower value range underneath there as well. But at the top of this run, what do we see? Does anybody know what kind of candle that is? Or as close to as you'll probably get without being textbook? It's called a gravestone doji. When you have a big long wick like that, and then a very small base. Ideally, you wouldn't have any wick at all at the bottom, but this is as close to a gravestone as you're probably going to see. And its name is just as it would indicate. It's called a gravestone because there was some serious pushback as price tried to go higher. And it pushed it right into the ground. So if all we were looking at was just that gravestone doji itself, let's pretend we didn't have our script running. We didn't get to see the point, because what do points indicate? Changes in direction, points and flats, especially on short-term moving indicators. They'll give you those little windows into what may be happening. So that gravestone doji and then our 5 EMA sensing the fade tells us a lot. So we can't say if we're using our methodology that we got caught. This is a money sandwich. There's your insurance. That's the one end of the bread. Here's the other end of the bread. Everything else is yours. And the chart doesn't lie. This has been a pretty smooth hourly for a while. But when it breaks down, it breaks down. And when you see this divergence between the T line and the 5 EMA, it tells us what? It tells us it's momentum, right? It's either momentum up or momentum down. Now, I'm drawing these fibs here, but I'm not totally convinced that this is going to be the bottom, the swing low. But just if it was, we're 618 to the upside, way up here. So is it a disaster that price fell? No, because we're traders, right? We like it to move around. We train ourselves to understand when it's changing direction and being able to spot it so that we can monetize the chart. That's the job. One job, monetize the chart. It's about what money does, not what people say. So as this was happening, did we not hear, as all we heard was all-time highs, all-time highs. I don't know about anybody else in the room, but every crypto wallet I had was telling me that, sending me notifications that we were reaching all-time highs, and wow, like, isn't this a wonderful thing? Well, end every sentence in this business with "for now." Yeah, price was moving higher. For now. There's no stopping us for now. Because eventually it turns around. And the people that get caught are the people that are worrying about narrative. They're not watching the price on a chart. You had plenty of warning to tell you that that something was going on. But you know what? When you're too busy talking to all of your friends and family about how great Bitcoin is, without being aware, yeah, you'll wake up one day and go, holy crap, where'd all my money go? This isn't a game, whether you're a trader or whether you're an investor. It's not Monopoly. It's real money in real lives. You can prepare yourself and train yourself to treat it seriously, so that you can make a difference in your own life and maybe lives of other people too. And it's not hard to do. But I hate people telling me, oh man, we didn't see that coming. No, you didn't see it coming because you weren't looking. You weren't looking. Right? Back it up. Always be backing it up to try and find, right? Let's just pretend for 1 second this is our hourly chart. You're in a long trade. Do you not, after a run like this, do you not sense that, okay, maybe it's appropriate to take something off? Are you going to ignore the same rationale that got you into the trade in the first place? I hope not, because you're going to give away every cent that you earn if you do. The chart was telling you what to do. Don't argue with it. Don't second guess it. And I say that because it's a struggle for me too. I'm human just like everybody else. But I gotta block out the noise. How do I block out the noise? I follow the chart. Simply follow the chart and follow the script, because it's basically the digital version of part of the methodology that gives us these safe and profitable entries and exits. Or entries long and short, I should say. So is any of this a surprise to anybody in here? No. If you were watching this chart and you saw this roll over and then finally got your confirmation, you would not hesitate to close your trade. You maybe even would have felt comfortable to go short. What do we talk about? The stochastic RSI, the Fisher transform, and the MACD. They typically go in an order, right? Starting with the Fisher transform. Right? We don't trade every cross, but we're looking for the ones that start to show us rollover. And it typically goes first, and it did, followed by the Fisher transform. Creates a Gaussian channel filtering out noise, thus the filters. It helps us give us a metric to help us determine whether we should stay in the trade or close the trade. And everything that we were looking at, from the divergence here to the stochastic RSI to the Fisher transform, and then the MACD goes last, moving average and signal line are well above zero, which means it's kind of overbought, right? And boom, it fades to. It was all there. The problem is nobody's looking because they're too busy talking. Excuse me, and this goes for almost anything. Let's look at XRP for a second. Let's go to the daily. I can't remember if we dropped this trend line here on the stream or I did it myself, but it's something that I do frequently just to try and give myself an idea, another metric for support and resistance. Well, lo and behold, it's looking like it's respecting it to some extent. So, do we live and die by trend lines? No. But when we start to see this, that we're failing, there's a message there. But where did this start? This backed up too, right? Go to the 4-hour. What do we notice about on the 4-hour? This attempt at that trend line was exactly at the upper value range, almost to the penny, and it rejected it. Attempted again here, rejection. Impulse up. Look. Right. Is that looking a little Batman eerie to you? It does. Batman ears are bad, by the way. Anyways, there you go. And it rolls over. Couldn't take the upper value range. Couldn't make an attempt to get up there. Fades. Where do you think it's going to go? How about the lower value range? Does that make sense? Like, we know it creates ranges for ourselves. Like, that's why we do this. So everything was there. We just have to be looking at it. And you have to be able to zoom in and zoom out to protect yourself. That's all. And, you know, we talk about things being a little scary in the markets, that they're so inflated. Well, you know, here's an example. Yesterday, massive candle. Look at today's candle. Where do you think it wants to come back to? And these are just charts, right? This is just, doesn't matter what the asset is. We're just using them as technical examples. And it helps you understand that you'll see this everywhere. Retrace, or the pullback candle, we talk about it all the time. It's going to want to find the 5 EMA. That's what it's going to be drawn to. The horse is too far away from the barn, and it wants to come back to a place that it feels comfortable. That will be the 5 EMA. And tucked right in there between the 5 EMA and the T line is the upper value range on the volume profile. And the volume profile is telling us where money has and hasn't been. Right? What do these big candles do? Anyone? They create gaps. Whether these giant candles are up or down, trending up or down, they create massive gaps in the future. Because although they're exuberant candles, they're not filled with anything substantive. And when they get retraced, they usually get retraced hard. But at least we know the levels that price is attracted to. Our job's not to fall in love. It's just to monetize the chart. There's a time and a place for all that other stuff. Right? This is about making money. It's about making your life better and those around you better. Hopefully that's kind of why we're here. Is all we heard again was all-time highs. Here's ETH, daily chart. We trade what's in front of us, right? Regardless of how much your gut's saying, oh man, I hate buying here because I feel it's been trading too hot and it's due for a pullback. The chart doesn't care what you feel. You could be thinking that the whole way up. The chart doesn't care what you feel. You have to trade what's in front of you. But you also have to understand how to read price on a chart so that it doesn't affect you in a negative way. And that's why we do this. We take a look at ETH, as all we heard about was the all-time highs. You tick them, and then what happened? Start peeling the onion back, and you'll see the breakdown. And because things are fractal, like, do we show this similar type of example on 15-minute charts and daily charts and hourly charts? Yeah, this is a 12-hour chart. Here's the insurance. Here's your confirmation. Look at the divergence in the T-line and the 5 EMA, which is simply expressing momentum higher, right? These impulse moves up don't break trend. These ones just go sideways back to the T-line and the 5 EMA like we talk about every session, and that's your opportunity to reload. Boom. There you go again. Here's our point. Here's our doji, right? Points and flats, changes in direction. Back it up to the 4 hour, and you'll see it here. And so on, and so on, and so on. And there's your hourly chart. You can't be awake 24/7. You can't be in front of the screen 24/7. So that's why we're automating a lot of this. If we know what these ranges really mean, right? Like, are we surprised to see price bounce around the point of control? No. When it breaks out, are we using the upper value range as a target? Yeah. Are we upset that, we didn't get every little penny up here? Not at all. Don't worry about that stuff. Just make safe, profitable trades. And all that will look after itself. It really will. And on this 1 hour ETH chart, because we show this all the time, there's our sell signal, all the divergence, even this big green candle that's just there to wash you out or freak you out, doesn't change trend. And what happens? You roll over and you take out the previous wave's low. We see it every week, every session. Why? Why these big candles? Because you got this gap, right? And they're filled, here you go, filled with fairy dust and air. What do you think the next level is? Just looking at this, you have to go to the point of control. Rico, what do you think?
I love that gap right there. When you see a gap like that, it's just, it's time for it to turn around. We were talking before the stream started, just like, how even sometimes, like you were saying, you can't get all of it and you don't matter, right? And I think today is one of those good days to, a lot, like you said in the beginning, a lot of people don't want to bring up these days or, but this is actually the best days to have a good conversation because like we started earlier on talking about CFX and how I've been trading it and been, killing it on that thing for like a week and a half already. And today just lost $500. And when you're so consistent and maybe you got wiped out or you got closed out, it doesn't hurt you as much because over the period of time, you're going to be more profitable when you start layering these things up and you're not going to be 100%. So, once the market hits its top and you got that sell signal, you see that gap on that volume profile, you see the point of control down there. Don't make it so hard for you to convince yourself that, hey, the chart's turning around the other way, right? Because although it's a cliche and we use it quite a bit, it is true. The trend is your friend. And, don't turn your back on your friend when it wants to go the opposite way. So now we're seeing that downturn. So, this is our turn to possibly short or just, do some studies. You don't always have to trade. You can just study what's happened, what's going on right now and stuff and take some notes.
No, that's 100% right. And these are, once you understand how price moves around from level to level, it doesn't surprise you anymore, right? You might be surprised about how the levels get stretched out. And just as an example, let's throw the 20, the 50, and the 200 up here. And the 100 just for good measure, because I know it's going to be in the middle. So, understanding how we do things. So, I love these two flats that are basically look like double bottoms, these 2 points rather, that look like double bottoms, and then you get a buy signal right in here off the 20 area, just above the 50. So you're already getting support, right? Of the 50, you get your signal off the 20. That's awesome. I like that. And price rides right up. Nothing surprising. We know how to read this. Support from the 20. Continuation. Here we break. The job is not to question. And I do this too. Like, I don't want you guys to think that I'm just preaching. This is stuff that's affected me in my journey. I would argue with myself as an example up here, going, oh shit, this has been a great trade and I'm 5 points away from 100% return or whatever it is. And you get inside your head. Well, why did I write this script? So that I don't get inside my head, right? When I when I see this or I see this, I instinctively know what to do, so that I don't converse with myself and miss opportunity or make mistakes. This is not a perfect science. There's always going to
I've
be
been
some
there.
give and take.
Yeah, I've been there where and I think and I want to touch on I like to touch on the psychological stuff because you're so good at the technical analysis and it's like, man, you're bringing in the sauce, but these little cues that you talk about are things that I've experienced myself and maybe somebody's listening as well. And I want to hone in on those moments because I've been there too where you're 97% profit and you're like, I want to get 100. I need to don't do that to yourself. If the charts and the indicators change, and I've been there. I'm not saying I'm not just grabbing this stuff out of thin air. I'm speaking, I'm wearing my heart on my sleeve because I've been there where I was like, where I was like, come on, I need that just so I can say 100 and I can make a cool post about it. Now I don't care if the chart's done and it's done
Mm-hmm.
printing in that direction. Hey, I just clip it right there and it's done. Right.
Yeah.
So make sure that you guys pay attention to your little self-talk that you have in your head. The minute you start having those little conversations, those little, and what to tell yourself, right? It's like, maybe it's ready for this bounce. Maybe it's like, no, you're pitching yourself this stuff because you want to see that 100% so bad. It's like,
That's right.
take your profits, right? Take your profits and live to trade another day.
That's right. If you guys just kind of make a mental note of this 4-hour ETH chart, right? Because it's a great example of where you've had continuation, right? We like to see that. So a little bit of a breakdown, or a retrace. This actually just went sideways and caught the 20 and got support. And you can see this rollover up here that on the 4-hour is getting support on the 20 MA. And this is all about levels, right? Current price is attracted to past. So on the 4-hour, you're sitting on the 20. And we've got, some obvious kind of giveaway here in momentum indicators. But if we back this up even farther, so now here's the 100 MA giving us support. So we saw in the previous time frame we're getting something off the 20. Here on the 1-hour, you actually caught a wick off that 100 MA and a bounce. Bounced up. This is a failed breakout, right? So came down, you got a bounce, a little snapback. But look at the 5 EMA and the T line. It's telling you that you're still in a downtrend because this is what you'd be looking at. The chart was telling you you're still in a downtrend. So this is, you break the 20, you break through the 50 like it wasn't even there, you wick the 100, you snap back, kind of almost wick the 20, and then pull back. A lot of traders would see the close above the 50 on the 1-hour, and they would want to buy that. They would interpret that as, okay, close above the 50-day. That's bullish, right? This is about how do we not make mistakes, right? How do we stay out of trouble? This is how we do it. This methodology was telling you that wasn't your candle alone, right? It was going to get rejected. So now we have a failed breakout, and I would look to take out the previous wave's low. And if it keeps falling, just as an example, it's going to come back to the 100, except technically it's not really the first time it would have visited it, so there's a potential that you could break this level. And if you break it, break one level, find the next. The next level would be the 200 MA and or the point of control where buyers and sellers have shaken hands in the past. And when it comes to the probability of, price finding these lower levels, we look at this volume gap and we say it's more likely to find the next level down than it is to instantly bounce higher. Because this gap, with it being there, it makes it difficult when there's momentum downward to hold price up. So it will look for a place where it can sit down and rest. And from there, there'll be a decision to make. And my guess is around that time, because time and price will come together, the 20-day or the 200 will move in and around that point of control area as well. It'll kind of work its way. So that's all a draw for price. Just simple stuff. I don't like how the MACD, moving average, and signal line are breaking zero the way they are. Right, so there's your zero level, and they're pushing down with some momentum. Why is that lagging? Because it's just first, second, and third, right? So you're seeing the breakdown here a little bit later, but it's just a series of confirmation. That's all it is for me. And this stuff was happening all over the place, not just in crypto. And some of this stuff got hit really, really hard. Here's CFX. So what was this morning? Or where actually, sorry. Let me back this up a second because here it is. So you look at this 5-minute chart, right? We know that everything is fractal. It's the whole nesting doll theory, right? And there's relevance. We talk about the 50-day moving average. The 50-day, no matter for me, if I'm in a trade, I'm always looking for a time frame where price is working off the 50. It's just kind of what I do. So here you are, having a fine little day, and I'm sharing this because I was kind of in this. So, whoops. I didn't like this candle here because it was the first touch of the 50. So basically I was kind of doing a little scalping, right? So I didn't like that candle at the 50 because I'm assuming it's going to get rejected because it's the first touch since it broke it. Let me blow this up a little bit, right? There you go. First touch since it broke. And then the stochastic RSI started to roll over a little bit. And I was like, you know what? I don't like this. I'm just going to take my toys and go home. And within this 5-minute candle, I actually entered a short, which I very rarely do. Like after I close a trade, I don't often re-enter the other direction. But for some reason, I don't know, this candle at the just sketched me out a little bit, and I didn't use a lot of principle to do it because I wasn't super confident. I just was working off instinct more than anything else. It just felt like it could work out. And then all of a sudden, it just like that. This doesn't happen all the time, believe me. And then that happened. Right, the next candle opens, and it basically opened at the base, and I'm like, you know what? Screw it. I'm going to long this one. Right, and I did. So, and you can see where I think I took it off here because I didn't want to hang around. But look, you never had any break. But this doesn't happen very often. But where did it happen? Right at the 50. Where do I like to buy and sell? At the 50. Start paying attention to where the 50 is when you're in a trade on different time frames. Because you don't want to fail the ice, right? This is the ice. You don't want to fail the ice. Bad stuff happens when you fail the ice. Here's the proof. Now, Rico's probably going to do this but I can't right now. But I was just going to say, like, does this not look like a failed breakout where you might want to roll over and take out the previous wave's lows? Right? All this is now resistance. If this rolls over, let's see, there's got to be a gap here. Yep. If this rolls over, boom, you're going to be hard back to the to the lower value range. And this is just technical stuff. I'm not saying it's a bad asset. I'm not saying anything like that. It's just technical. Right? But where was your short signal? Way up here. Right? This is why we use the script. Because it works. You don't have to worry about what's going on here right now as much as this is like showing a failed breakout, as is this whole thing. Here's your signal. Do you feel like you gave anything away because you went short here as it's about to roll over and potentially hit this level? I don't think so. Don't get inside your head. right? Just keep those basic things at your disposal. First attempts, fail, the whole current prices looking for past, identify those areas. It's all about levels, money in, money out. Right? Real-time representation of what money's doing, not what people are saying. Bitcoin, where did it happen? Right up here at the 50. We talk about this every week, right? These equal tops and equal bottoms. Now, there's a lot going on in here to give you some indication that stuff might be happening, but when you see those equal tops and everything else is like you see it, it's like night-night. We know it's coming. Or we have more probability of understanding that we know it's coming because we're following the chart, not front-running it. We're following the chart. So, because everything is fractal, I'm just going to shorten this up a little bit. This is 30 minutes. So, with everything being fractal, when this momentum move down is done and price starts to retrace to the upside, what are you going to do? How are you going to determine what your levels might be? And let's make an assumption that we form a base around here. And this is all hypothetical. We're just doing this in real time. Let's say we form a base here. Price starts to kick up. Well, it's just simple level by level. Start with the lower value range, which just happens to be right in line with the 5 EMA. So that's going to be a draw for price at some point. So you'll want to see if you can get some momentum and push it to test that level. If you break through, then price will test the T line. And what you hope to see if you do that, you want to close above the T line. That's kind of your first indication. Write that down. Close above the T line is one of those things that you're going to look for, but it's not your entry signal. Because keep in mind, a close above the T line wouldn't have created enough momentum to pull the 5 EMA up through it, indicating a change in direction. So these could just be maybe a couple green candles which might turn into another leg down. Once you close above the T line, trade above it long enough, if you have enough push, you're going to pull the 5 EMA up. And that'll be one of the things that will indicate a change in direction. And then there's some other metrics going on in the background that are trying to filter out all the silly signals. Break that level, and then you're going to look for the point of control. And this gets you excited because if you get on the other side of the point of control, you know there's a gap there. Just like on the south side of the point of control, there's a gap, right? You can see it now. If you get into that gap, what's going to be a draw for price to the upside? How about the 20 and the 200 day? And they are representing past price, right? And they're creating a level. So let's find these levels. Well, here we can maybe adjust this a little bit. We're just doing this on the fly real quick. I'm using this because it lines up perfectly with the point in the 5 EMA and the T line. It cuts across these wicks perfectly and bases these two candles that have these equal bottoms. And it gets us within a hair of the 200. This level is now a support, in my mind, a support and resistance level. So price will be attracted to test it. Wants to break through there. Breaks through, finds the next. If it breaks through, it finds the next. And let's say it does break through here. Is this going to be the first attempt of the 20 MA? Yes. So what should you anticipate? That it may fail, right? It's more likely to fail or find some resistance than it is to blast right through. Of course it happens. But statistically, it's more likely to fail. And when it does fail, what would happen? It would retrace back down to another level. Maybe it's something like this down here. Just for fun. And again, I'm just using this point back here of the T line and the 5 EMA. They just seem to work really well. And you can see it lines up the base of these candles and a little bit of sideways trading in here. So that would be a level that I would identify. And of course, there you've got the lower value range. Just keep in mind that the lower value range, the point of control, and the upper value range on any time frame you're looking at are dynamic. So they'll change. So if you're looking at a 1 minute chart and you thought you saw one of those lines move a little bit, it's because it did. You just don't really notice it on the larger time scales. But that's what we're looking for. Like this stuff, like this is what's going to separate you guys from all your friends that are doing this kind of thing as well. And maybe they're DJing, maybe they're buying meme coins, and you know, one day a week they make money, the next day they don't. I don't know, right? It's not my shtick. But this is going to separate yourself from all the people that think they know what they're doing. Right? This is a process. It takes time, and it takes dedication, and it's repetitive as hell. Right? Like it's it's learned by doing, ultimately. And there is a difference when you're trading a demo account and then you trade live money. There is a difference. Is it great practice? Absolutely. Practice the discipline of following a system and making only the trades that make sense. That's part of what you should be doing on the demo account. Just not trying to grow it, right? Make sure that you're challenging yourself in the right ways. Don't be afraid to make mistakes in there either. That's how you challenge yourself, and sometimes you'll be right and sometimes you'll be wrong. But then you do the post-mortem after the fact. If you were watching this chart, you'd be hoping you get support from the 20. You don't. Right? This is, if we were just trading the signals alone without using anything else, pretending we didn't see this little double top there in the 5 EMA, which I use all the time. Laugh if you want, but it works. If you weren't out then, you would be at the signal, right? Let's say, and you know, if you're going to go, that's a short signal. This is a short entry signal. It's not an exit signal from a long. It's a short entry. So there you go. Next level, you'd be short to the 50 instinctively. Maybe that's where you want to take some profit off. And then, hey, maybe you want to take some off at the next level, and so on and so on. Right? You don't know that you're going to get total complete capitulation. You have no idea. Right? But if you were short in this already, and then that happened, wow. Right? And when it did happen, and this is, I guarantee this has happened to every single one of you, this situation where you're in a trade, things are going well, you know what, the moon, the sun, the stars are lining up, your hair's looking good, and you're in the trade, and boom, you get that added bonus, and you're like, you know what, that was crazy, I'm taking I'm going to close this, that was insane. You've done it. I know you have. I have too, but not anymore, because now I know, because I'm following my chart, that the move isn't over yet. So I'm not panicking. I'm not so excited that this is too good to be true. You're calm, you're cool, you're collected, because you know how to read price on a chart. That's the missing link. Understanding how to read price on a chart. You guys notice anything else in this 30-minute? And again, you would see this if you're using fractal analysis properly. You would be looking most likely at this time frame. Impulse down, sideways, but no real snapback. Two equal tops, impulse down, sideways. Doji tests the T-line, runs away. The divergence here is still intact. So ultimately this is what? A failed breakout that you take out the previous wave's low. And the move hasn't finished yet. No surprises. Right? You're calm, you're cool, you're collected. Are you happy to see that big red candle down? Absolutely. but it wasn't done. And by using these multiple time frames, you'll have seen that. Like, if you would have seen this wick, if I wasn't in this trade, I would have shorted that candle. Right? Because there's your impulse down. This is already the top of the arch, the failed breakout that's failing the T-line with this doji. Trust your charts. Just follow the chart. I know it sounds too simple, but just follow the chart. You don't have to be the mad scientist to figure out how, the inner workings of every indicator and all the math behind them. You don't have to do that. It's important to understand what they're measuring, sure. If you want to take some time on your own to do a little bit more of a deep dive, that's okay. But understand how they help guide you through in and out of a trade, and how they help you understand the language of the market. That's what we're learning. Math is a language. This is a derivative of mathematics, and thus it's a language unto itself. Right? And I'll be the first one to admit, I suck at other languages. I panic when I have to go to another country they speak a different language, because I'm so bad at it. Like, I speak English and chart. Everything else, that's it's off the table. But it's a language. Just follow it. It's telling us what it's going to do. And I know I don't want to make you feel like I'm trying to beat this into you, because I'm not. But it's just really important to understand that is all you have to do is what you're told. Just do what you're told. And once you're told what to do, now you have the ability to, even if you weren't using anything on this chart. Let's just take these off. Right? Let's say I didn't have those averages up or anything like that. As all I know is that I'm to stay in this trade. Right? Stay in the trade. Just level by level. And the chart's telling you. Was it telling you that it wasn't done here yet? Yeah. Did you know that was coming? Nope. But because you're in the driver's seat from the beginning, you don't have to stress about it. This was an added bonus that still had more to give. We talk about not giving back our trades, which I think is critically important. But also make sure that you're taking what you're entitled to, which is something that took me personally a long time to figure out how to do that effectively. That's kind of where this comes from. Because I, like everyone else, when do I buy, damn it, and when do I sell? Well, now I know. Right? It took me a little time to figure it out and to put it into a digital form, but this is it. Short, stay short. If this candle was to pop, you'd get stopped out, and then this would just be the crust of the bread, and this is all yours. And by the way, when markets are crazy, the risk mitigation part of this equation is more important than ever before. And it doesn't matter what we're looking at. We can look at Solana for a second. Actually, let's go back to XRP. When I'm trading in an environment like this, I will run 2 stops, believe it or not. So let's just say I was just trading this 15-minute chart. Let's say we want to go long here. And again, I'm just using this as an example. These 3 candles are kind of forming a little bit of a base, so that would be an area that I would consider putting a stop in. Right in there, at the bottom. And that would be a hard stop. Then what I would do is I would put in a trailer. So I'd probably set it at, and if you're using a little bit of margin, you have to remember that all this tightens up. But I would put in a trailing stop. So I would have a hard stop at this level, and then a trailer that might be, 2% as an example. right? So it gives me a little bit of room to let the trade breathe, but allows me to kill it if I need to kill it. Once I get, the idea is to get a good entry, right? Like if you don't get a good entry and you end up buying in purgatory, it's going to make all the decisions that much more difficult as you move forward. So getting a good entry, long and short, is important. And then again, you're in the driver's seat. Once I get ahead, then I would move my stop up. Even if, let's say this was my entry up here and my stop was down here, then once price moved up a little bit, I'm actually moving my hard stop so that if there was a disaster, I would get stopped out either in profit a little bit or at least at zero. Right? And you're hoping that the trade is going in the direction that you want it to go as it starts to develop and move higher. So I'd be looking at this level as the previous wave's high that price would want to look for. As price moves up to that level, my trailer's probably moved up above my hard stop. So I'm safe. And then from there, you're in the driver's seat. You're in the, if something goes sideways from that point forward, well, you're stopped out with profit. If you want to tighten up your stop, you can. Of course, you're going to have a target set, right? So this was our first target. Let's say we take that out. What becomes our next target? The previous wave's high up here. So again, because you can't be everywhere all the time, you have to kind of automate the process a little bit. So set an exit for these levels, whether it's, X% that you want to take off here and then, the ladder up top, or whether you want to take it all off. That's up to you. But you're in the driver's seat, so it's a lot easier to make that decision. But make sure that you've got exits booked, stop set. You might get, price might move up here, your trailer would have moved up here, and then you get a pullback candle and it hits your trailer and you're knocked out. Okay, big deal. That's how we do this. Just automate it. That's what's great about the script. Takes the guess out of it, and you can just trade. Get you safe entries, 8, 9 times out of 10, and you mitigate your risk, and you do okay. So if we were trading XRP here, this would have been a nice entry and a great place to put a stop. Right in there, I'd put my stop. Price moves up, I'd probably move my hard stop up a little bit to let my trailer catch up. But I don't want to give anything back, but I'm so, because of the volatility, I'm extra cautious. Maybe you dial back your leverage a little bit, right, to give it a little bit more room to breathe. Those are, just manage it a little differently if you need to. Any questions on that? Because I'm sure that can be confusing for some people. BYDFi allows you to use a trailer. Right, so, I'll use the trailer pretty much on every trade I do. Set the hard stop, put in a trailer. Here's another level of, a nice base. You don't have a signal here yet, right? So you have to understand that you got a couple hours of sideways trading forming a nice base, but you don't have any sort of confirmation that the trend is changing. Right? This is why we wait. This is why we wait. You could spend hours waiting for what you think is the perfect entry, thinking this is it, and you're right for 5 minutes, and then it starts to roll over. This is a failed breakout, taking out the previous wave's low. Any other questions or things we want to look at? Let's look at B&B. Rico, why don't you take this one? Or did we lose Rico? No, it's not here. No. Daily B&B, you have to notice the wicks at the upper value range, right? So that is it's just one of those quote unquote levels that we can't break through, creating two equal points in price, which usually triggers a little bit of a pullback. And when that happens, where do we know, or where do we kind of figure price has to go back to? The 5 EMA, like it does here. That's what it's going to test, right? Because there's a lot of people that will look at this saying, oh, this is an absolute double top. Is it? Maybe this has just been, you have a big move up, a retracement back, and then this next move higher takes out the previous wave's low in the end, right? We don't know that yet. But it's good to see price hold the 5 EMA and the T line. So it kind of wicks those levels and pulled back higher. That's a good thing. That's bullish, right? We put that in quotes. And you can see that price still is showing some strength. And if it was to fade, what would we be worried about? We'd be worried about that big gap to the downside. But we know it's there, so you're not surprised. That's why we do this. You don't want to get hit by stuff you didn't see coming. This is bullish when price like this has a hard pullback. You basically kind of made a new high, and price faded to a respectable level. The T line and the 5 EMA are those respectable levels of trend, right? Look to the left there as you see price rise. Was it respecting the T line and the 5 EMA as it went up? Yeah, it did. And this could simply just be one of those red candles in what turns out to be a continuation pattern. You can't look at the chart all the time as if the sky's falling or price is going to the moon. It is just the ebb and flow of how price moves, right? It's the inhale and the exhale. None of you can run around a track endlessly forever. At some point, you're going to want to take a break. And that's what price is doing. It just takes a break. And when you just move higher repeatedly where nothing gets in your way, you spread out ranges, right? So what do we know is happening in behind the scene here? We know that, without looking, and we'll show you in a second, that the 20, the 50, and the 200 are likely fanned out, right? And they fan out because of the parabolic rise in price, right? And when that happens and those averages get fanned out, they are those retracement levels on the way down. And they are, again, your targets. And you can overlay those levels along with the structural levels that you see on the chart, along with things like the volume gap, so that you can understand where price might move to. So are we trading above the 20, the 50, and the 200? Yeah. And whenever that's the case, and you've done it in such a way where the velocity of the move fans out those averages, you have to anticipate that at some time you're going to come back and check those levels. So what's down here at the point of control? The 20-day moving average. So if price does roll a little bit, that's what it'll want. It'll want to test that level, which is completely appropriate. It just feels bad. Like if you were to have a big red candle that hit the 50, well, That would have been a target anyways, right? Just the fact that it did it with some velocity. But you know how hot this market is. You know that it's a little bit overbought. So at some point in time, again, you have to come back and take a break. And that's all that I'm interpreting this is right now. If we go to Bitcoin's daily chart, this is one where we've had these levels on here over the last couple weeks. What's happening today? What do you think we're looking for? Would the 20 probably be what we would be looking for support? Absolutely, it would be. This is why, do any of you ever set orders or exits rather overnight that you might think are, batshite crazy? I do. And where do I set them to? I set them to these levels. Because if there's any sort of volatile reaction, where price in this case would be moving down, that is an area that it would look for to tag. Again, it's not pin the tail on the donkey. We're here to get you really close. But I do that all the time. I don't wake up in the morning and expect it to get hit, but every once in a while it happens. And I only do that because I know over the last 25 years that it kind of works out every once in a while. Right? These are big volatile moves. They don't happen all the time, but if they do, you're there. Use the technology that you have to make better trades and more structured trades. Set exits, set buys, all that stuff. Alerts. Use all the technology that you've got on these platforms. TradingView is great for it. Absolutely great. This is for De La Toshi. I know you've been trading this a little bit. And this is something that I've obviously been in here before, because you know that I do trade it once in a while, and I was obviously just creating some levels. But what can you tell about the upper value range? That perhaps it was some serious resistance. Right? It's not difficult to see. Big impulse candle up, hits that level, and your next candle forms that equal top we talk about all the time, and it fades. Fading to one of these levels that we had drawn for support and resistance. If it doesn't hold and continues down, then, well, guess what? It's probably looking for the 20 and or the 50-day, and likely will find its way down to the lower value range, and possibly the 200. Sometimes we almost forget what symbols we're looking at, because we see the same patterns over and over and over again. They just keep repeating. This is not what I was looking for. There it is. We looked at this chart last week. Do you remember what we talked about? Probably wants the 50. I still think it probably wants the 50. I'm just cutting this line again right across the top of the 5 EMA here. But yeah, there's the 50-day. We're just waiting to be tagged. I understand there's stuff going on with Monero in the background, with the hash rate thing and all that stuff. But you know what? That's not how I don't base my trading on any of that stuff, because I block out the noise. It's just words. At the end of the day, we had, regardless of time frame, we had plenty of opportunity to go short. There's when you got your short signal way back on the 18th. And since then, it's a little sideways, but you can see it weren't breaking out anywhere, and then you went south. And is there any reason? Here's another one of those candles, right? That gives you a big wick higher, doesn't reach. I think the previous one didn't make the T line in that other chart we looked at. This one's reaching for the 20, can't make it, and it just reverses right away. But you've got all of this divergence telling you that it's just a short opportunity. It's either to add to your short, or if you're not in it, you could probably enter it. And feel good about it because you understand how this works. And guess what? You see these gaps down here. We talked about this. It's going to want these levels. Not a reflection on the asset at all. It's just reading price on the chart. What the heck is this? Okay. So this is scale. Something that I trade from time to time, but I wasn't certainly trading it today because I would have talked about it. But here you go on the daily. What do we see here? Flat trading, right? It's consolidation. That's got a little bit of movement, but really it's range bound. And what are we hoping for? Well, one day the damn thing's going to break out. I guess that's what this did, right? Where do you get your buy signal? Right at the 50. Little bit of a cheater entry was available to you if you wanted it, but there's your confirmation. Made quick work of the 20 on the daily. Little bit of a retrace, but you never broke the uptrend, and then, you know, this candle again right off the 50, bang. And price goes parabolic. Where did it go parabolic to? Anybody? Upper value range, right? To the almost to the penny. So don't think, you know, the stuff about, well, it couldn't happen to me. Well, here's something that you might think couldn't happen to you to the upside. That price would go from a penny, 0.019, to 0.052. You didn't wake up thinking that could happen to you that day. But you just don't know. You don't know what comes after the next candle that you're currently looking at. But price will be drawn to a level. I'm sure there's a whole bunch of stuff in here that it blew by, but it's always looking for something. And if it fades, where's it going to fade to? It's going to look for, like we just showed on the other chart, the 5 EMA. This is the horse is too far away from the barn up here, and either time and price come together and they meet, or price fades back to that level. And if it holds that level, if it was to fade it and hold it and then start moving higher, well, then obviously you're still in a bullish trend. There's your volume gap created by this giant candle, and on a retrace on the next candle as an example, if it was to start to fade, falling into that gap, it would eat this real quick. And this is stuff we've seen before. This is a little concerning where, you know, you're not really getting any sort of a pushback today, really at all. Let's look at 10-year Treasury. So here's a monthly chart of the 10-year. Now, when we talk about what's going on a daily basis, you know, the thing was down to like 4.2, almost even at one point. And on the monthly and some of the longer time frames, this is still holding, which is, when I think about it, it's not what I would have expected to see, because it's all I've heard about over the last few days is how much the rate's fallen. Right? It has, again, this is a monthly chart, but it's still bullish. You're still working under a buy signal. You're still holding the 20, trading above the 50 and the 200, so that's supportive. But what's price looking for? Current price is always looking for past price. So if price if current price is looking to move higher and it's looking for past price, it's looking for this level up here, and then this level up here. This is the 5% that everyone keeps talking about. But if we back this up, just kind of framed in this is where price has been before, right? This 5% level, we tagged it briefly back in 23. Faded, got support. Faded, got more support. And now we're just going sideways. But we're still supportive. And when we look at what's up there, because we know that current price is looking for past price, who else is hanging around up there? How about the 500-day and the 1,000-day moving average on a monthly chart? And for those of you that have forgotten or are unfamiliar, the amber line is the 1,000, and on a monthly chart, that represents 84 years. The 500, 40 some odd years, 42 years. And we know that price is attracted to past price. Perhaps this past price will become relevant in the not too distant future, because that's what it's going to want to the upside. If it fails, well, then we know how the breakdown goes, right? Fail the 20, you'll look for the 50. Would it be the first time that it hit it? Yes, so it would be inclined to get some support, but I don't know. We'll find out later, I guess. But this is still bullish. So when I hear this, interest rates are falling, well, they have a little bit, but long term, they're still hanging around. Hanging around enough to make a run from there if they actually wanted to do it. But because it's all fractal, we can back it up. Like, this is pretty range bound. All of this trading on the weekly. But it hasn't broken down. It actually seems like it's just hanging around up here waiting for the 200 to catch up. It could. Now, look where we took off from. This level in here that we popped in there a week or so ago. Support, right? Buyers and sellers shaking hands. That's when you see that flat trading or zoned out, benched in trading. That's what it is. Price is looking for the previous wave's high. Will it hold it? We don't know. We're going to find out. So this is light trading. So if we fade here and this big green candle gets retraced, it could get retraced hard. Let's just make a quick, whoops, wrong line. Just like we did on XRP. Should we leave that there? Let's see if it fails this level. If it doesn't, it's going to take out that high. Rolls over, probably look to the 200 and somewhere back in this neighborhood again. Tesla. And I'm showing a lot of weekly charts because it's going to filter some of the daily noise, right? But here is the daily Tesla, and look, here's your upper value range. Does it look like resistance? Yeah. What's the downside risk if it doesn't break out? Well, you break down, you got the 20, the 50, and the 200 that are kind of twisted back down here around 318, 317. Fail that, right back down.
Hey, Glenn, I'm back. I rugged for a second. My whole TG was just like acting up, but
No
I see you're at the point where you're bringing up different tickers and stuff. I was going to see if you want to bring one up when you had a chance after
Yeah,
you're done
for
with
sure.
Tesla.
Yeah, what would you like?
It's called Soundhound.
Soundhound. What's the ticker
Yeah.
for it?
The, the ticker is Sound.
Soundhound. Oh, okay.
Yeah. But that same friend of mine that's done really good on D Wade, this is his next play. We're all happy about when we talk together. We're all giggity lately because of.
Well, but
Yeah, so this is
this is a
yeah,
great example though. Like, the 50 is really important to me in my trading. 50, 20, 50, 200. But I love the
yeah,
support that it was able to get after this big dump. Like, you can expect these up and down moves, right? But it's where they find support that's telling. Like, if you don't find support in these areas, that's a real problem. But it does. So this is just a matter of, an attempt to move higher, failure, attempt to move higher, failure. It's the whole flowers and chocolate thing, right? You want to go out? No. Okay, go home and get some flowers and chocolate. You want to go out? No. I'm going to go home and get some flowers and chocolate. You want to go out? No. And eventually, maybe she'll say yes, right? And there you go.
you guys heard it. Not only price predictions, but I won't go into that joke. But if you go back a little bit, we've been watching it since before this dip, so we've been keeping an eye on it since I had this nice little crash. But I told him I was like, it'll definitely turn around, and then here it goes after that nice little dip. It just started to creep back up because now it's looking really, really good. And it's nice to see it over here, like with the the volume profile. You can see the gaps that it filled, and it all makes sense. Like when you look at it, it all makes perfect sense why it's at where it's at right now.
Yeah, and you're getting trend support, which is great. Um, you're a little hot on the daily, and would it make sense to kind of come back to, like, the horse is a little far from the barn? So yeah, maybe it would, but I like, look, this is a nice chart, and the weekly's even nicer.
Yeah, like I said, we're
So
giggity.
I think you're looking for this actually. You're that on
The
the
price is
daily.
that.
Yeah, that was your previous. I think you're gonna want to look up there, or at least
What
that's
is
the
that up
trend,
there?
right? It could go like this, Rico. Like, it might not happen in 2 weeks or
Yeah.
anything like that, but
What price is that up there?
20. Let's say $24.
Nice.
Yeah, yeah, it's a nice chart.
Every time it goes up by $1, I see this guy with a bigger smile on his face.
You're going to see a lot of different charts. So let me look at a stock. So this is a stock that probably nobody's heard of in here. It's called Babcock Wilcox. Look at this chart. Right? Like, talk about flat, right? And this is the weekly. And so people will tell you, oh, technicals, yeah. Okay, look at this. Come on. Tell me this doesn't work. Like, this is not hard to figure out, right? But this chart, totally beaten up, and
Primed.
starting to get a heartbeat, right?
It's starting to get a heartbeat.
And I don't want to get into the reasons of why that might be or what they do. People can look for themselves, but you're going to see a lot of charts like this that have been beaten up, maybe kind of even forgot about, and like, people just forgot about this company. They've moved on to tech and all that kind of stuff. But there's a heartbeat here, and there's opportunity. So if we look at this chart, where do you get your bid? Like, you start to pull, move higher right at that lower value range. That's the insurance. There's your go signal, and you haven't been given since any sort of a sell signal. So we're obviously bullish. We've broken the 20, we've broken the 50. Now we're in the process of looking for previous waves highs. So you got one up here at 260. And it might be a version of, up and down till you take it out. Get into this gap here knowing that the 200 is up there. That's pretty rewarding, and the downside risk is limited. So you'll see a lot of charts like this right now.
How'd you find that one, Blunt? Because I do like the idea of finding something that, like, people has just been dormant, because that one looks amazing. Like that gap to at least go test, what is that? Your 200 is the red one,
The
right?
red's
If I
the
remember.
200, yeah.
Yeah. So even if there was a trade to go test that, it's like that gap is right there. How'd you
Yeah.
come across this one?
This actually, somebody that I know told me about it. So,
Okay.
just kind of said, hey, take a look at. And basically, said, hey, take a look at, but don't look at the chart because the chart looks terrible, right? Because,
Yeah.
when I think it was 67 cents when I heard about it. So somewhere around here. And yeah, the chart looked like it had been thrown up on. So that kind of, just a friend of mine drew my attention to it.
That's cool.
But,
That's how it
that's
is,
all
man.
it is.
Like,
Yeah.
even my friend showed me about this Sound Hound, and he's even like D Wade at the right time. Like D Wade is through the roof. If you look at that one, he got in at $6.50. That thing's it's been sending nonstop.
And
So
what's the symbol for that?
that one is the symbol for that one is D hyphen WAVE.
Eco Wave?
It's D wave or Q2 QBTS. The ticker. QB
There you go.
QBTS. Yeah.
So, it just another good example of one of these charts
Yeah.
that's just been crushed over time, right? Like, look, you could burn yourself out trying to find the perfect long opportunity on these things. I acknowledge that, but I do think that there's charts like this that deserve a look. If they're good companies and they have some history and they have good customers, like there's reasons um, to watch them. We talk about price is attracted to what? Past price. So this is awesome. Once you broke the 20 or the 20 and the 50 here, you just couldn't help but look north and look, boom, right? Targets, targets,
And when it broke
targets,
past
targets.
those previous tops to the left, both of those two little tops to the left, it was like, forget about it. We're out of here.
Yeah. Like, you know, you just this weekly candle popped right up to the 200. Again, these are the levels that we talk about. Red candle, but what did it do? It just wicked the 5 EMA, so and pushed higher, so that's bullish. Following candle opens
Yeah.
on the north side, still green, then you gap up. All right, what do we see? Point, doji. Okay, I get it. You only have to tell me once.
Yeah. But it still just kept
Yeah,
going once it broke those previous ways high again. It
yeah.
just wanted to keep.
So these are weekly charts, so that's to be a rough ride if depending on if you were juiced or not. But here you go. There's your continuation off the 20-day. Again, and then boom. It's choppy, but the trend is very clear. Still wants to move higher. The sketchy part, Rico, will be when this stuff does retrace, and it will. Right? It's going to happen. These levels, like on the way back, are going to feel extreme. And it doesn't matter if it's stocks or anything. It doesn't matter. They'll feel.
Be violent.
That's exactly right. They'll feel violent.
They're gonna feel violent.
Yeah.
I'm sorry.
Here's the weekly chart of NVIDIA, and I left the fibs up here from last time. So we didn't really break that level. It's still fairly true. So 618 is $123 on the weekly, which sounds absolutely nonsensical. But if it was to pull back and you start to break level by level, you have to look to where the draw for price would be, which is in and around here, and there's 618. The 50 is right at 50% on the weekly, so that would be also more than appropriate. And of course, the 20. But it's not going to happen in one candle, right? It's going to be, it's a process. Somebody was asking me why the Dow often looks different than the NASDAQ or the S&P. So I'm just going to go to the daily chart, and hopefully you guys can see this. Okay. So for those of you that don't know, the indexes are weighted differently. So the Dow is price weighted. The S&P and NASDAQ are market cap weighted, which I believe often gives the Dow a little bit of an early show or an early tell on the chart because it's responding to price, and I think that makes it more sensitive. And that's why sometimes the Dow will look one way and then the other two, like, you know, here, this is a pretty decent red candle today, although it's moved a little bit higher, but yet the S&P and NASDAQ are still green. But they're market cap weighted. The Dow is price weighted. So back when price fell off a cliff earlier in the year, and I believe we were doing these streams in my Telegram and in Discord, I talked about quite openly that this was my get out of Dodge candle. But yet, you know, on those other charts, oops, it wasn't showing up as much. And it was a little bit of a lag. So I was actually going the other way up here because of the Dow. And I always find that the Dow just gives me that little bit of an earlier look. It's not always correct, but this was two sideways, and when it started to roll over and fail the 20, that for me, under any circumstance, is a short signal, right? Fail a major moving average and just so happen to have a sell signal appear, yeah, I'm going to take that. You have no idea, though, where it's going after. Look at the divergence. All of this, break one level, find the next. Break one level, find the next. Look at the resistance that 200 gives it, right? Because its price is respecting it. Finally breaks out, fails, right? Tries again. So whenever you see this, you see how it tries again to take what it's failed once but not twice, and it fails here. That's the ultimate get out of Dodge signal. Boom, crashes again. And then since then, it's been nowhere but up. But always look at the Dow. If you follow indexes, the Dow often gives me what I believe is a little bit of a look, couple days, day, that the other two seem to miss. So oil's up $1.12, which is $1.79, which sounds awesome. So if you're watching the news, oh, oil was up today almost 2%. You're like, wow, that's great. Is it? Because what's it doing? Oh, it's failing the T-line. Well, you didn't tell me that on the news. You said it was up 2%. So I don't know what I'm supposed to do now. Who do I listen to? Because if I listen to the person that just told me it was up 2%, I know, I'm all excited. Charts don't lie. So far, this is just a green candle that hasn't been able to break through the T-line. So it might be green, but it also might be bearish in its message. We will find out. But how price is on a chart is really maybe what you want to know. Did they tell you that this candle was down 2%, but caught a bid off the 50-day moving average and spiked? No, they don't tell you that. They'll just tell you that it's up, down, whatever. But how price is on a chart is really what is meaningful. Telling me something's up or down by X doesn't mean anything to me. Did it fail to 50? It was up 50 cents but failed to 50. Well, guess what? That sucks. That's, you can clap all you want about the 50 cents, but it's bear sentiment. Do you guys have any symbols you want to look at? The market giveth, the market taketh away. Right? This is the stuff. So, like, in full disclosure, this is something that I've been watching and I like, and I would probably maybe even buy a little bit of, right? And then yesterday I saw this, like, son of a, but because I've done this more than once, I know that I didn't miss anything. No reason to get upset. Everything will be fine. Price will come back to a respectable level, and you can entertain it again. So, basically all that's happened is we've just basically come back to where we were yesterday, right? The horse got too far away from the barn, and it came back to a safe, comfortable place. And we'll see what happens on the next candle after this. And how do we get a clue what we might be looking for ahead? Well, we're going to back it up. There's the 12-hour. If we don't hold the T line, there's your 20-day MA. And there's your 50 and 200, and what else is in there? The 500. So those are draws for price. So if you fail this level, you'll look for this, which is also looks like it's sitting right in line with the upper value range. Makes sense that it would find that area. Now, it could just pull back, tag the 20 and get a continuation and move up, spike again and take out that high. That's all possible. That's in the event of an uptrend, that's what you should expect. In the downtrend, you test and fail. This could actually just look like one big massive failed breakout, and you come back and take out the previous wave's low with all this stuff down here and the point of control and this gap. If it doesn't hold, yeah, I would think that's quite possible. But did you think about that as a chance yesterday? Did you see anything in the chart that would make you think that it could come back to that level? Not at that point in time. Right? Just looks like it wants to go higher, and there's nothing you can do about it. You just have to wait your turn. Right? Too far away from the barn. This little gap here was going to get filled, and it did. And it's just repeat play, guys, right? Repeat play. Here's the 4-hour of the same asset, Xano, and guess what? It's rolling over, and it's looking for the 20-day moving average. But you do not have, just to give you, an idea of how much momentum it can take to pull the 5 EMA down through the 8 EMA. These impulse moves higher, spread them out because they affect the short time frames quickly, right? Roll over, but it takes a lot of momentum to bring one down through the other. What could potentially happen here on the 4-hour, and this is why we do multiple time frame analysis, is that this could be a big move up, find support at the 20 or in and around, and then bounces and creates what will appear as 2 equal tops, giving us that, is this a continuation off the 20 that's taking out the previous wave's high and then we'll move on? Or is it going to create a double top that we ultimately fail and then we pull back down and take out the center channel of that double top and probably find the 50 in that scenario? This volume gap here is a little sketchy, so if you don't hold the 20, price can get into that and fall fast. And basically that's why you see these 3-4 candles here that are pretty intense. That's because they're just retracing fairy dust and air on the way down. The 20 MA is the support. It's a representation of time and price. So, up, down, and sideways, right? Those are our options. So you got price going sideways, so that takes one of the three off the table. And then it's just a matter of which way is it going to break, up or down. And I'm not at the point in my life anymore where I see a wave like this and go, oh my God, I missed my opportunity. No, it doesn't even faze me anymore. Doesn't even faze me. Maybe wish I could have monetized it to the upside, but as far as, building a portfolio, nah, doesn't faze me. It'll come back to where I want to buy it. And when it does, I'll be ready for it. And I will buy it at an appropriate price, right? You don't want to be this guy anymore in your circle of friends who somehow miraculously seems to pick every high possible to buy at. You don't want to be that guy. And you don't have to be that guy. You're the calm, cool, and collected one who just will be patient, wait for their opportunity on the retrace to pick it up where they want to pick it up. Like grown-ups do. Right? Real men don't trade memes. Let's trade stuff with lots of volume. That's what I look for, volume and good price swings. And in crypto, you get all of that most often, maybe not the volume, but you get the good price swings, and they're technically bang on, 9 times out of 10, very, very technical. We're struggling with Bitcoin. We got to hang on to this range. If you fail these bottoms, that's a problem. Remember we talked about candles like this, being good spots for stops, right? Well, if you break that level, chances are you're going to do some more discovery to the downside. And again, it's not a knock on Bitcoin, or it could be anything. It's just a chart. It is just a chart. Anything you want to look at, guys? Solana. We didn't look at Solana, I don't think. Whoops. Don't want that, do we? There we go. It's a familiar little double top scenario, right? Lots of support from the 200 and the 50. So where are you looking to buy? Where you've got that kind of support. This is actually a nice chart because you catch the move higher. If you closed it up here, you would have had a nice pullback and you would have seen this area. Let's assume you just want to go long. This would have been a really nice spot for a buy. And in the process of buying here, that this level will become something that you'll have to deal with. Whether it's take the trade off, take some off, whatever. Maybe add to it if it looks like it's going to move higher. But if you're in at the right place at the right time, it makes all of those decisions easier. Because you're working with a rationale that makes sense and is proven and it works. Like, I think this is a good spot isn't necessarily a good strategy. It just isn't. Any questions today in this massive volatility? That's there just to ring your bell and frustrate you and get you excited all at the same time?
I think it's part of the space, man, and I'm glad that we have you here to guide us. It's been so much easier to deal with volatility when you look at it with a different with a different prism, right? You're looking through a new lens.
A different lens.
Now, we got a different lens now, so it's like it's just part of it now, and it's a way that we communicate with each other. It's a part of this. It doesn't mean that the overall grand scheme of thing is not according to plan. We're talking about what's going on in the moment, right?
Yeah.
And I even liked that one chart that you showed, like BW because I don't get caught up in the noise either. And I think this is why I've resonated so much with you, Blunt. And I'm sure your ears are always ringing. You can ask Delatoshi. I'm always mentioning you during the live streams and stuff like that. But it's like when you showed that BW ticker, right? And it was like, if somebody wants to go find out more about it, go find out because you reach a point as a technical trader that's trying to print, right? Or printing every day that you have to be able to block out that noise where, hey, if you want to go find out what this company is really about, you go do that. But I'm a technical trader, not saying that fundamental technical analysis is not hold any water into space, but it's also good to see that, there has to be a disconnect at times where, because that's where you marry the bag. You marry some of these things because you dig too deep on it. It's like, oh, they're gonna cure this and cure that. It's like, no, you know what? Let's just ride it to this gap that it has right here, and we'll figure out what it's gonna do after that, right? No
Yeah.
matter what the ticker is.
Like we've had David Nikoski as a guest a couple times in here, who I like to say is a friend, and he's one of the better technicians that I know. And what's great about David Nikoski, if you don't follow David, give him a follow, is that not only does he understand how the economy is hardwired, he wouldn't call himself an economist, I would never say that, but he knows how things work. But when you combine that knowledge with the understanding of how to read price on a chart, that is an incredibly powerful tool. And what makes David even, what I think, more effective is that he focuses on relative strength. So you can have a sector. It could be tech, it could be oil and gas, it could be, however forensic you want to get. But out of that sector, there might be 10 companies that are worth investing in. And what you might find, though, when you actually start to do the dive and you peel back the onion, and David is looking for relative strength, but you might find that company D that you didn't really think would be at the top of your list has the most attractive relative strength. In other words, out of that sector, the first name that comes to your mind may not be the best performing. And I think there's stocks out there like BW and others that might start to fall, under that kind of category, right? It might not be the thing that comes to your top of mind, but maybe it's going to be one of those that actually outperforms the leaders. So that's what's really cool about David, is that if you don't follow David on Twitter, I suggest you do, because he'll throw you little nuggets all the time. David will throw out a symbol, and then a couple days later, boom, the thing goes to the moon. He's pretty good at it. But I think that has a lot to do.
Possible to show his page to the listeners. Maybe Dave's gonna be like, "Where all these new followers come from?"
I know. Let me see if I can find Mr. Nikoski.
Yeah. If not, it's all right.
No, I'll find him for you.
Yeah, we got a lot of gorillas in here, and it's always good to, those are part of our filters as well, right? Sometimes people do that for us.
So this is David's X profile.
And what is that, at David what?
It's at Dave VERMILION. Dave Vermillion. So when you start going through Dave's X page, you're going to see all the stuff that he's been talking about, either privately or with some. And he's really, really good. Like, it's all about, he's looking again at relative strength.
Actually, sorry to interrupt. Actually, there was one time I was driving, and I just happened to listen to one of the biggest spaces. And they were talking about oil and, I don't know, economy, and I don't know, whatever. But yeah, he was a speaker.
Yes,
I was like,
probably, yeah.
I know
Yeah.
this dude.
Yeah. Yeah, we'll get David in again too, because I think he's a great resource for the people that listen to this stream. Like if you're interested in technicals, that's a guy that you should follow. What I was just bringing up here is this is MicroStrategy's 4-hour chart. I like because it can give away a lot of secrets sometimes, and you're failing the 200 on the 4-hour at a volume gap with the lower value range and the 500 MA all kind of coming in play. So what are we doing? Here's your failed breakout, right? There's your bounce off the 200. You wick. If you take away anything today, how many candles did you see like this that at the top of an arc wicked a relevant level and then ran away? I think we've seen it 5 or 6 times today. Here's another example of it. And you'll see it on various different time frames.
Yeah, that's a great way to, that right there, that little pattern right there, it's a great pattern.
Yeah, taking out the previous waves low.
That's the one that rings your ear all the time, the first mouse, second mouse. Yeah. That's what it happens on the top side too, because this is like a infinity sign, it's like it mirrors itself. So, just like you see this little scenario playing out to the downside, you'll see when it fills a gap, it'll do the exact same thing where the first mouse is like, okay, I'm making money, but then it starts to get squeezed out because it's pulling back. It's like, I'm just going to take these profits, which I used to be that mouse. I'm like, let me at least keep these profits because, it's bad enough trying to make profits in this trading realm. And then next thing you know, it bounces off to 50 or something like that, or a major moving average. And then the next mouse gets all the cheese. And I'm like, man, I could have been that mouse. I was in the right trade.
The timing is everything, right? It really is.
I swear.
So we were talking about charts that have been beaten up, and this and CGC are probably the best examples that you could find. So these are, this is rather Tilray, large, cannabis grower. This is a chart that at one time, grandmothers were buying this stock for their grandkids, right? Because it was going to be a great investment for them. And
are you serious or are you joking?
No, I'm serious. Like, I'm not kidding.
Okay.
Like, and I'm very familiar with this stuff. I did some consulting in the space and so on and so forth. So, there was a lot of excitement, energy, hype when cannabis was legalized here, and all these, companies could literally start to grow properly. And there was so much hype that it's a great example of when you just turn the tap off, what happens with price, right? Like, you don't necessarily have to short something for price to go down. You can just not buy it. And that's kind of what happened here. And these things, although they have structural and fundamental business challenges, look at the chart technically, right? Like, this is just failed breakout after failed breakout, after failed breakout, resistance at the 50, time and time and time again. So yeah, did their business suck? Yeah, but the stock performed exactly how we would anticipate, level by level, just dealing with support and resistance. But the trend was obviously down. So here's another chart beaten up, and so many people are probably watching these charts because they want this to have some kind of movement. And I think there was a little bit of news this week about cannabis in the States. I'm really not even sure what it was, but I think that's what kind of caused this reaction. But ultimately, it's just a chart, right? Like, how many opportunities did you have in and around the 50-day to short it? Countless times, right? Like, going back into early August, mid-August, the thing's gone nowhere but down. Eventually, you'll get a buy signal and, price pops. Will this hold? I have no idea. Like, too many hearts have been broken with this kind of stuff, right? It's just speculation. at this point. So people trading this, in my opinion, is not financial advice, but it's highly speculative. It's almost like trading crypto in many senses, because you're relying on the government to tell you that you can have a business or not. So, you have to know that going in. Is it much better to buy it at 50 cents than 300 like it had once traded for? Yeah, probably. So, maybe there's some upside, but is there a path to profitability for this company? I'd like them to show me, because I think they'd be hard pressed to do that in a reasonable, objective way, without any pie in the sky projections that they're famous for. Anyways, enough about that. These are just charts, right? Break
Blunt,
one level, we find the next. Yep.
Blunt, I've got a question.
Okay.
Why do you guys you experts on technical analysis, why do you use the 50 MA and 200? Why not 300?
So the traditionally the 200-day moving average is your most basic bull bear indicator. So if you're trading above the 200, price is considered to be bullish. If you're trading below it, price is considered to be bearish. That's basically the rationale. And because I use fractals in multiple time frames, regardless the time frame that I'm trading on, the 200 will show me what's trading above and below, that's bullish and bearish. So if I'm trading an hourly time frame, then I would be using the 200 on that hourly time frame to tell me whether I'm bullish or bearish. And this is obviously, because you're trading well above, it's bullish.
Basically, you're saying it's a tradition.
Well, I wouldn't say it's tradition, but it is the accepted practice. It's the best practice. I would put it as that.
The 200 MA does not miss. I know that from my history. The 200 MA does not miss.
Yeah, it's a pretty reliable. This is why. So people talk about the algos in the markets, right? So when you have a break of the 200 MA, let's look at NVIDIA just as an example here, because it's on our screen. The algos don't like that, right? And there's belief that when the algo sees price breaking or has price breaking below certain levels, it'll sell off or have some sort of a response. And the same is true in all likelihood when you break certain levels, right? The algos will interpret that as bullishness, and stuff like this happens. But they tell us, whether it's bot driven or not, I don't care. The only thing that's important for me is that you guys have a real simple way of understanding when it's safe to buy. And here we are, we don't even have a sell signal anywhere on here yet. So this chart just said buy down here on April 25th, and you did. And on August 14th, you're at 181.90 from the 106 that you may have bought it at. That's why we do this. This is why we're here, right? We've got a set of tools that are reliable, easy to understand, and more, can get you in and walk you through a trade on any time frame with reliability. And when we make sure that we're mitigating our risk using stops, setting targets to make sure that we check ourselves out and take profits at the appropriate time, you'll start to feel like you get a handle on this really quick. You'd be surprised. And I don't know how many of you were around when we first started doing these streams during the pandemic on FEG, but what Rico just said was one of the things that kind of struck me, is that everyone feels, or the people that followed us felt, that they had a better understanding of what was going on in the market without the anxiety, right? So these big movements in price, the sky's falling, we're going to the moon, the sky's falling, we're going to the moon, gave them the ability to filter all of that out. And that when they saw that stuff happening, they could put some context behind it. Oh, that big green candle got, bumped its head on the 50-day and then completely failed. I understand what happened there now. Okay, I get it. So the anxiety that you remove just by understanding what's going on is like a vacation. This is Exxon, and it's just like, again, I like to draw just to give me some context, right? But this has been a trend that, yeah, it's continuously moved down. But it's got nice swings, doesn't it? Like, do we like swings like this to trade? Yeah, traders like that. Do we have clear indications of when it's, safe to enter those moves? Yeah, we do. And we're less apprehensive or nervous about entering those trades because we know what's going on the chart, right? This could be XYZ company. This is a move down, a move up. Potentially, we're looking at a failed breakout to the downside. That's option 1. Option 2 is sideways. I don't think that's going to happen. Option 3, we look for the 20 and the point of control at 108, and this is on the daily. Right? I don't think sideways is going to be an option here. It's going to be up or down. If you do move higher and you do kiss the 20, is that the first touch since you broke it? Yes. More inclined to fail on the first attempt. So there's no need to be scared about what's gone on. There's no need to be scared. It feels frightening. It feels scary. But on the daily chart, what happened? Well, that's all we did really is kind of come back and hang out at the 20 MA, which is support. Okay, I don't feel terrible about that. I don't know what's coming on the next candle, but I feel good about this. I understand what's happening. And because you understand, you can prepare yourself and you can plan and you can do the one job that you have, and that's monetize the chart. All the little clues were here, right? Just dial it back daily. 12 hour. Look at that. You wicked the 50 on the 12 hour. Like, look. That's to the penny, man. So I'm always looking for price off the 50. Everything's fractal, so you can see us hanging out at the 200 now, whereas on the 12 hour, we're sitting on the 20 and 50. We roll it back. We roll it back even more.
So your buy signal, most of the times is on the 50. Got it.
It may appear there quite. It actually, now that I look at this chart, I can see what you're saying. Yeah, it does appear that way, but I like the ones that appear at the 50. I prefer those ones. So we talk about making less trades, right? So if you make less trades, make fewer trades, but take the trades that fit your setup, your ideal setup, you're gonna be A, more profitable, and B, less stressed. Just take the trades that make sense. So one of the things that I look for as a qualifier, yeah, I like green candles at the 50. I've told you this since the day that I met you guys. I like green candles at the 50. I like them at major support anywhere, but at the 50, they're special. And that's why I trade them. Right?
And then when it's overbought, that's when you sell.
Yeah. Yep.
Gotcha.
Yeah. And again, you're allowed to love Bitcoin and buy and sell it on a regular basis. You can do that, It's not against the law. Just because you love it doesn't mean that the only thing that you can do is buy and hold it. if you love Bitcoin and you want more Bitcoin and you're able to trade Bitcoin to make money to buy more Bitcoin, then do that. Or more XYZ company, whatever it is. That's the tool that you're getting in doing this, is the ability to build a larger portfolio of what you love. And yeah, you're allowed to trade it to get there. And whatever it is that you're trading will perform and behave the same way as what you're seeing right now. This could be ETH, it could be oil, it could be a biotech. It doesn't matter, right? Price was moving higher. That's the money. That's the inflows, right? Inflows, outflows. Money coming in, you can see it. Money leaving, you can see it. It's as simple or as complicated as we want to make it. And sometimes we just choose to make it a little more complicated than we should.
So basically, what you're telling me is take profit when you actually see it.
Yeah.
Take some profit when you see it.
Yeah.
And then work on your 50 MA and watch out on the 200 MA.
When you have money sitting there on the table, it's okay to take it, right? Don't give it all away. Don't give it all away. Just one last thing. This is the daily chart of XRP, and this is a trend spider chart. And I talk about the anchored VWAPs all the time. That's the anchored VWAP for price, and this is the anchored VWAP for volume. And I find that price loves to reach for the anchored VWAPs. So here you get, a bit off of it essentially. And you can see it's been used as support and resistance, right? Well, now it's supportive. And where does price go? Right up to the other anchored VWAP. Just another form of a target for you to use to the upside. And you can see, the divergence here between the T line and the 5 EMA, and then you get the big point, right? That's an indication, points and flats, that you're changing direction. And you get that with that doji, which is a little more support that you might move to the downside. Where did price come back to? The upper value range on the volume profile. That's what this is. So just look for levels, follow the chart. Right? When you're trading on the north side, you're moving up. On the south side, price is moving down. It's just the ebb and flow. Fibonacci's, use them whenever you can to give you ideas of where price may want to go. So on TrendSpider, they have this little feature. It's called Auto Fibs, and you just flip it on any time frame that you're on, and it'll give you the proper fib drawing. So you don't have to be worried about, did I do that right? Did I take the wrong low or the wrong high? It'll do it for you automatically. And on this move, where did it show? See up here? This is 618, boys and girls. Price pulls back. Boom. Where did it head to? 618. That's why we use fibs, right? Fibs, fractals, filters. Now, it's almost uncanny, right? It's a daily chart. Just flip that button, and it tells us to the penny where 618 is, and lo and behold, 1, 2, 3, 4, 5, 6, 7 tags, 7 wicks, and then it rolls over. There's no crystal ball. It's just using simple tools to help guide us. So we're going to do, probably when I get back from vacation in September, we're going to start doing, or I'm going to do like a boot camp where probably within a weekend we can have anybody trained up so that they would be comfortable using this methodology to make trades. Safe, profitable trades. Any other questions, guys? We kind of went a little bit over today, but there was lots going on, so.
No, sir. Thank you.
All right, guys. So let's we'll end this for today. We'll regroup on Tuesday. If there's any questions that you have, please don't hesitate to reach out. The script that we use on TradingView is a private script, so you won't be able to find it when you look for it in the indicators. But just reach out to me and we will hook you up. And I think you'd find that this thing will pay for itself in absolutely no time each and every month. So it's worth its weight. That is for sure. And guys, like we're just looking at this hourly Bitcoin chart, it's still letting go, right? Impulse down, sideways back to the 5 EMA, and there's no bite, right? It just loses the 200 on this and it's fading even more. Broke the value range. So, anyways, guys, I'll catch you later. Rico, are you doing your thing today?
No, XPX has a space in about 45 minutes. So we got that. And yeah, I've been just the last couple of days, we took a couple of days off of streaming because I met a lot of people at the Cardano event, that side mission. I got to give a big shout out to the Rare Evo people. They did so good at that event. I got to network so much. So the last couple of days, I've been basically talking to Cardano people and onboarding them and showing them all the things XPX can do. So today's a space that we got in about 45 minutes. Where we talk about what's going on with XPX, and then just honestly going to do some more work on the back end of everything we got going on. So, yeah, it's going pretty smooth.
You know, for those that don't know, I think XPX is given us an opportunity to actually utilize your crypto in a way that you probably couldn't before, because you have both KYC and non-KYC physical cards and virtual cards, right?
Correct. And we even have like high limit non-KYC gift cards, which, a lot of people are starting to see the good use in that, especially people like in the UK, using like a 5K limit, non-KYC card can be really beneficial to have some fun, maybe if you're in the UK, but there's a lot of options. Card? That was a gift card. So you'll get like email verification. Yeah. So yeah, that's non-KYC high limit cards on there.
And it's only in the UK?
No, they're actually the gift cards actually give us a lot more range compared to the physical cards, because the physical cards we can't do business in embargo countries. But the non-KYC gift cards it really gives people a lot more flexibility as far as limits and as far as territories where they can use these gift cards, right? And you can use them online wherever you want. So just some options out there for everybody.
That's awesome. You got to check out xpxpay.com.
Thank you, bro. I appreciate it. Right. Yeah, that Cardano event was amazing, man. And shout out to the FEG team as well. Like, Smart DeFi Contracts allows a project to literally just go to an event and not have to worry about it. It's on set it and forget it. I was very happy to say how much we had staked. I was happy to talk to people about how our asset backing works, because we have a lot of great utilities, XPX, but we also have, I believe, some of the most amazing smart contracts in the space, thanks to Rox the Alien himself, which I really care about this guy. He's a real one, and I bug him on a regular basis because just like I bug Blunt, because, you got people with a lot of source of information and wisdom, and they're willing to give it up to those people that really want to know. So, yeah, our smart contracts are fire. Shout out to Smart DeFi. Go check that out as well. That's where we launched XPX. We have over 77% of the supply staked. We have 58 BNB in asset backing, which is wild to think about because it's just starting to accumulate BNB back to back. So over $50,000 in the baseline price of XPX going up. So check out Smart DeFi and check out all the great projects. There's many over there on smartdefi.com, and they're all utilizing these amazing contracts. So check out everything over there and see what you like. I guarantee you'll find something.
Well, hats off to you guys. You guys have, with what you've been able to do with FEG and Rox, you've kind of produced what I personally kind of started envisioning to happen with Smart DeFi. So it's, your project, and I think Nova too, have really taken off. So hats off to everybody there. You deserve it.
Hey,
Sure.
quick question to Rico. I've just literally Googled xpx.com, and it says the domain xpx.com is for sale. No
Yeah, our
valid
website.
delivery
Yeah, our
channels
website's
available.
XPX. Yeah, our website's xpxpay.com. But maybe we'll
Oh,
just buy that. Yeah, we'll buy that one up as well. Marlone and David handles a lot of that stuff for us, but I'll post it in the team chat right now so they can buy that server up before before Robbie buys it.
You
Right?
should get a link from there.
yeah. xpxpay.com. Now it comes up. All right.
Yeah.
Because I'm in the UK, and I need them cards.
Yeah, go to xpxpay.com, go to crypto bill pay, and there's some very high limit cards that people have been using for the UK, which is cool to see because that's what it's there for. It's there for, just to use the tools. And what's nice is, it all goes back and feeds into this ecosystem. So it's nice. And that's all I want. I want people to be able to, experience their crypto in the real world. And I think that brings more adoption, because the minute somebody says, why are you buying crypto, or how can I use it? We're like, hey, you know what? This gift card that I just sent you right now via email, you can buy somebody a gift card, put their email in there so they're the receiver, and then they can receive that email. So you can either do it through your own personal email, or if you know somebody's email, you can put their email so they're the receiver, and just let them know, hey, I sent you a little gift or whatever, and they can claim that, gift card and use it in the real world. So yeah, some real nice high limit cards in the UK. Robbie,
Nice.
You'll probably like that.
Nice. Well, that's awesome. Listen, well, thanks, guys. I appreciate your time today, and glad that we could get together. And we will do this again on Tuesday. And